Welcome to Bauhaus Week Ahead, Week 27. It's Week 27, and the economic data is coming in hot, like inflation scorching hot. So buckle up, because we're unpacking what's happening with your wallet, your job, your gas tank, and even your favorite stocks. Let's go. First up, inflation. The Core PCE price index, aka the Fed's favorite way to measure price increases, just came in at 2.7% year over year. That's higher than expected. What does that mean for you? Your money's losing value faster. That $100 doesn't go as far as it used to, especially when you're shopping for groceries, paying rent, or filling up at the pump. So if you've noticed your budget shrinking, you're not imagining things. As long as inflation stays sticky above 2%, the Fed's unlikely to cut interest rates anytime soon. That means mortgages, loans, and credit card debt are staying expensive. So, heads up. This is your reminder to budget wisely and take advantage of any deals or sales you can find. Next up, bank stress tests. On June 27th, the major banks were tested to see if they could handle a major recession. Good news, they passed. They simulated $550 billion in losses, and banks like Charles Schwab crushed it with strong capital buffers. Why should you care? Because stable banks mean your savings are safer, loans keep flowing, and the economy doesn't stall. But remember, weaker oversight could tempt banks to take riskier bets. If you're planning to park a big deposit somewhere, do a quick check on your bank's health. Now let's talk jobs. Coming up on July 3rd, the US releases new non-farm payroll and unemployment data. Jobless claims are a little better than expected, but there are signs the job market might be cooling. If the report shows strong hiring, say over 200,000 jobs, it could keep rate cuts on pause. But if the numbers are weak, under 150,000, the Fed might finally pull the trigger on those cuts. Either way, this data impacts your paycheck, your hours, and your opportunities, so keep an eye out. Also on the radar, oil. OPEC Plus meets July 6th to 7th to decide oil production levels. Russia wants to ease into higher production. But if the group decides to cut output, oil prices could surge past $70 a barrel. If they can't agree, we might see prices stay low, around $65. What does that mean for you? Gas prices, higher oil means more pain at the pump, more costly deliveries, and tighter monthly budgets. And now for the big risk watch. The S&P 500 just hit a record high, over 6,100. Sounds great, right? But don't get too comfortable. There are major red flags: looming tariffs, rising national debt, and possible stock bubbles, especially in tech. We're talking Nvidia, Coinbase, up 40% or more. Add in geopolitical tension and potential oil shocks, and the stage is set for market swings. Watch out for July 3rd and July 6th through 7th. That's when jobs data and OPEC Plus decisions hit. Add in the July 4th holiday, and you've got thinner markets and potentially bigger price swings. It's a recipe for volatility. Bottom line, this week is a financial roller coaster. Inflation's still a beast, banks are flexing their muscles, jobs are steady but uncertain. Oil could go either way. And the market? One headline away from a shakeup. So play it smart, save, diversify, and don't let the calm fool you. What's your strategy? Drop your insights in the comments below. And as always, stay sharp, stay curious, and above all, stay Bauhaus. Like, follow, and subscribe to our social media channels for more market insights and analysis.